up, snipers? STLMO, St. Louis, Missouri. Yay. What's up? What's up? What's up? I hope everybody's Monday was awesome. Oh shit! I hear my yeah. Okay, so let's start recording here. Okay, now we're being recorded. So for those of you who are here for the first time, let us know where you're from. As I said here in the little shared screen, let us know where you're from, tuning in. Always appreciate the global crowd. If you are not naked right now, you can share your video. We appreciate it. I like seeing faces. It energizes me. If you want to talk shit, go ahead. I want to see who talks shit to me as well. I don't hide anything. I'm transparent. So if you want to, measure the size of the bicep or anything else, go ahead. So Monday, I personally don't trade. I observe and manage trades if I took any trades on a Friday. I don't know about Ryan. So
that's me as well. I mean, yeah, I don't trade Mondays normally. I mean, unless it's something perfect. But most of the time, if I'm looking at anything on Monday, it's because I already traded. I have a position probably on Wednesday or Thursday I'm holding. Other than that, no.
All right. As always, I want to ask this, or not ask this, say that everything we say today is not a financial advice. We're not some licensed financial advisors or anything. It's just an opinion on the market with the trade strategy that we trade. That's all it is. I like to have it open for chats. If you guys have nothing nice to say, don't say it. Just gonna delay the meeting and probably get someone banned. Who cares about that? So lately, last 3 weeks or 4 weeks, we've been into NFT. I don't know if any of the people here from the couple of the channels that I am in, either Angry Apes or High Rollers NFT projects, but welcome. It's your first time. Always glad. Do we have any complete newbies in Forex in here on the channel right now or on YouTube watching? If you're on Zoom, put in one, no shame. If you want to troll and say that you're a newbie, you can do that too. SND, what's SND?
It is supply and demand.
Oh, supply and demand. Thank you. SND. Yeah. I never.
It is actually from Malaysians. It is from Malaysians.
Oh, gotcha. If it's S and symbol and D, I would have.
Yeah, actually, they write it like this mostly. They write it like S and D always.
Yeah. So, well, good, because we're also supply and demand traders primarily. There's more to it, so that's good. Search and destroy. I like that as well. Search the market and destroy it, snipe it. And all quiet? Do we have any newbies on YouTube, Ryan?
We've got a couple, but yeah. Anybody also before we forget, anybody asking questions on YouTube, do so. If I need to, I'll answer those, but if they need to be demonstrated, I'll shoot over to Yuri. Also, everybody on our Zoom call, make sure you ask questions in the Q&A, and the comments will go in the chat. So it just makes it easy for us to keep them, straight.
I'll try to promote everyone to panelists, but this thing, Zoom has a bug. It doesn't do it for everything for some reason. So I'm gonna try one more time. Maybe it'll pick up one or two. Oh, it picked up Jameson. Yay. All right. So last but not least, if you don't follow us, do so. We appreciate it at Lord Fury 83, at Ryan Billenberg, and at Furious Snipers LLC. If you want to join our team, DM us through any of the channels that you know us from. We'd be glad to, if anyone joins our snipers right away before the question's asked. It is not free. Obviously, if I'm going to spend my time mentoring you in a one-on-one setting, I don't work for free, even though I might look like the nicest guy in the world. That's not the case. But anyway, so just want to throw that out there. And don't be shy. We usually respond right away. All right, so let's go about what happened. As always, last week was abundant. Market's abundant every week. If you're not profitable, it's probably not the market's fault. You're probably looking at the wrong market, what it is. But for me personally, Friday, it was kind of a shaky week. I lost it. Here, let's talk about what I lost. I do lose. That does happen. So I lost this gold trade here, simply because I was looking at a small time frame, and yes, I do that stupid stuff sometimes. So I simply entered here at the top and got very happy when this was moving down, and then it just exploded. And I knew it's bullish overall. I just thought it's going to actually clean all this and come here first before coming up. But that was the early loss there Wednesday, and then Thursday I recouped the losses, and Friday, as always, for the last 3 months, is my best goddamn day. Friday was cake. It was the most amazing setups ever. Clean as fuck. So let's talk about a couple that I drew a chart here. So and the way I do this, right? So I'm gonna show the trade that I took, that I've worked out, and then I'm gonna stay on that chart and do analysis for what's to come. So it's gonna be a top-down analysis. We always start out, from the high time frame, just to know what's going on. Goddamn screen, I hate this. All right, so I don't know why people are buying this thing, or why long term, but we're right now we're in a bearish retracement, right? Also, this is weekly, right? We're last week was pretty damn bearish, right? So we're bearish on the weekly. Probably come in for all of this liquidity all the way to here. So we come to daily. And by the way, if it's your first time, or if it's your first in Forex, this can be a little advanced, but stick around, especially to the end, where we can answer any questions, even the super basic ones or funny ones, like ask me anything kind of thing. I don't discriminate. No question is a stupid question. That's not true. Some questions are stupid, but usually I refer to them. If something was asked and 5 minutes later someone else asks the same question, that is a stupid question. So anyway, so 4 hour, obviously bearish, right? Low, high, low, high. We're just taking this low. We're super bearish. Okay. The reason is, of course, DXY is super bullish, and last week we broke through this daily on DXY. We broke through this daily candle here that held the bearishness, right? So as soon as we broke it, I could tell you this is the supply. The next supply zone is all the way over there. We're not there yet. So we got more bullish DXY, which means further down for EU and GU to go. Pretty much all majors, but definitely EU. All right, let's go back to this GU setup and how I was able to snipe this. So let's go 1 hour. Boom. All right, so 1 hour, I was doing, for my guys, I was doing an overview. Here's the scoop, right? We went, here's the low, here's the high. Then we came here into this demand, taken out liquidity, bounced, and dropped. So this is drop-based drop thing. So we expect it to come back to supply, which I thought it's going to come here. or to the extreme, which in this case is here or here, which is why you see distribution that I was expecting there, right? So it didn't reach it, right? And then slammed down over here, which after we taken out external liquidity, we now have permission to retrace, which I think this is the model of inducement. For those of you who don't know what inducement is, it basically is what's going on right now is you have smart money traders and you have retail traders. You always have retail traders, but you have smart money traders who get trapped, and you can check me on this, but smart money is the new retail, because now everybody who knows anything about trading trades smart money, and yet people still lose money at the same 95% ratio, and that is because now smart money get trapped, and how they get trapped is with liquidity inducement. So typically what happens is this, right? And my guys know this, but this is the pattern, right? You have a bullish trend, and you have this break, and then a retest, and then the takeout, and new structure formed, right? So the smart money traders automatically say, hey, structure broken, I'm going to buy over here, right? Especially if you're stuck on one time frame, right? That is number one reason you're losing. If you're stuck on one time frame, you don't do multi-time frame analysis. So what happens is we take out this retest into the extreme zone, sometimes several levels into extreme zone, and then go there. And then people get confused. Well, I thought structure is bullish because it's higher highs, higher lows, and then it made a higher high, and I lost here, and then made a lower low, and I tried to sell here or sell as smart money traders would do here, and I don't understand why I lost. Well, that's because you got induced into a buy here, induced into the sell here, and got smoked. Buy was the right thing. It's just you got induced into a buy into early from just a simple break and retest type of stuff. Right. So what I mean, break and retest, right? This is break and retest, and then you take out the retest and go. Same thing, opposite on the sell side. So if I go too fast or something is unclear, you can write the question in the Q&A. Please do. All right. So judging by what I just said, I believe what's going to happen is here's your essentially break and retest. But the thing is, we did not come to the supply. We did not hit the supply. We went too early, and this is when people say, hey, shit, this left without me. It never leaves without me, trust me. So now there's two potential scenarios. One, that we're going to come back to supply, taking out this high, especially if we consolidate the market here, because one of the questions we ask here is, where is retail? The retail is at support resistance. So especially if they come over here and start doing this type of shit, people are selling from here, putting stop loss at this wick, right? So then they come in, slamming through everything into supply and then dropping lower. Or the second scenario, because over here we didn't take out all liquidity, it might come to the extreme over there. So we temporarily might be bullish. So what happened on Friday was a super clean setup. Not as clean as GJ, we're coming next. But this is what I was seeing, right? I was seeing this. We had a high, we had a low, then we came back into the supply and came back lower. What did I just show you? Break, retest, new structure level, breaking this low, come back, take out the retest into the extreme, and then we slam down, right? Instead, what happened was, this was what I was looking for. So at first I sold over there, but it bounced here. Why did it bounce here? Because demand was bigger than supply. Now, I'm one of the people that is an advocate of picking a pair per day or per week, depends how you trade, and milking the fuck out of it. Because I can pick GU, for instance, and do 7 trades on it up and down everywhere and make more money than you trading the whole market. I can prove it to you, guarantee you. So what happened here was, when I woke up on Friday, and I trade New York, so I woke up at 6 a.m. somewhere here. I saw this range being formed, right? So as I saw this range being formed, then I asked myself the question, okay, so are we going to take the top or are we going to take the bottom? And I still had my stuff charted out. So of course, we create a range within a range, create liquidity. So I'm going to risk this and get in over here. But the best part is to treat this as accumulation, manipulation, distribution, and then mitigation is where that's a safe entry to get in. Right? Okay. Then this morning, super easy. No, I'm thinking GJ. I'm sorry. I'll show you GJ this morning and Friday. So anyway, as I said, I'm kind of waiting on here. We're creating this liquidity, but we're having trouble. So all of this to me is inducement. I am expecting it to, I need an order flow shift, which I'll talk about on GJ, because that was the most beautiful thing that happened Friday. So I'll show you that. But here I'm expecting an order flow shift in this area after it takes out all this liquidity, and then come higher. Like I said, I will look at for any reactions here, but then this is the area that I really want to concentrate on. So thinking of buys for tomorrow from this area. For an order flow shift, I'll show you an example and you'll know what it is. So, for those who don't know, right? So we used to trade Wyckoff a lot back in the day, and I was trying to appeal to the Aporia group, Mike's group, that only specifically trade Wyckoff. So I do know my Wyckoff. So that's why you see Wyckoff accumulation here. But again, Friday was the most amazing setup ever. And it was so easy, a caveman can do it. So same type of structure. We're bearish overall. And I was going from 4 hour on, or actually 1 hour. If you look, we have a drop, compression, and accumulation, and manipulation, a distribution, and now I was waiting for it to come into A, the last point of supply, B, extreme, before coming lower. Friday, that didn't happen. We came here and we just did this bullshit. So I thought to myself, this is just raw thoughts. This is just raw thoughts. What I thought to myself is, we're not going to jump miraculously over there. And we already formed a spring. And by the way, who don't know why this is a spring, the spring is where we shake people out, but there's different types of springs. There's a total of 4 different springs. The most recognizable being just, the double top or double bottom or something, and a spring, and then break a structure, and boom, and you go. That's just a classic example. But a spring can take a form of another micro accumulation as well. So in 1 minute, that is beautiful accumulation here. But anyway, so super easy how to get this. Look at this, guys. This is super easy right here. So again, I wanted to buy because I need to sell later, and we need to get there. When I woke up, I was here 6 a.m. I marked this up differently with AMD as I showed you, and then I saw, okay, where did the order flow shift originally? Here. So now we broke structure there and started sucking in, inducing buyers. Reducing buyers, we take in structure, so now everyone's going to be trying to buy out of here. Boom, we buy out of here and nothing, right? We failed to make a higher high. So now watch, guys. Super easy. High, order flow, right? Order flow, watching the order flow. High to the low, lower high, lower low, lower high, lower low, right? Here's the last point of supply. There's the order block. This wick comes into that, right? Comes into this candle here, fails to take out the low, right? Why did I get in there? Simply because I was actually looking in this area for a test of a spring, plus Quasimodo, which is the same level of this wick, box model that we discussed in bootcamp that we had. It's a very tiny stop loss, like 2 pips. So I was like, if I lose this, I lose this, right? I'm an aggressive person. But here's the classic entry. As I said, we came into the supply and we failed to take out the low. Then we take out the previous supply, previous order block that did create the lower low, right? We take this out. This is what created the lower low. That failed to create lower low, and then we take it out. This wick. We also take out all of these levels and break structure. What's left? What has left? What is left for us to do? Mitigate. Last candle engulfed in the bounce. Boom. Anywhere from this to this is a valid entry. Right, so I just entered here, and then it just keeps going. And then this morning, as I'm looking to where to take it, just unbelievable. Like, this was the close of the day on Friday. We had the spread take this wick, but I noticed something, which I always notice. It did not take out all the liquidity. There's still lows here. So automatically I'm like, okay, liquidity, balance, and an order block, valid entry. What do we do? What did I say happens? Break, retest, take out, new high, take out all the liquidity, mitigate, then make a new high. The same fucking thing. Always. The same thing. Come up, break and retest, take a new high. People are trying to go to super small time frame, I don't know, scalping, something here. Maybe they try to go, oh, liquidity void, let's go in this way. You know, no, it's right there. Everything's perfect, lined up, clean. All right, and we hit the area from which I was gonna sell, but just barely. We hit the area, but I actually took out the limit, so I am not in this sell, just because the first reaction, it didn't come to the area from which I actually want to sell. It came sort of to the area, but not quite. It didn't make it there. So, and as I always do, I play the ranges. So that first reaction, that's your range. We took out the low, we took out this liquidity, failed to take out the high. Now our order flow is still bullish, but it's not ready. This is crap, all crap price action. And I'm not interested in any of this. What I want to happen is one of the significant manipulation. So to me right now, what's going to happen if I see the low gets taken, then that's the AMD, accumulation, manipulation, distribution. That would be the manipulation. Then I would wait for the structure to get broken, and then I can get in over here into whatever, or over here if it shows me what I need to see, right? If it shows me an order flow shift here, or BULPS, if you will, in Wyckoff. If it does, on the other hand, consolidate and then London opens with this going up, I most likely will wait to either for it to show me order flow shift here, or most likely just do a sell limit from there to go down, because I think it's going to be a failed, because this is still AMD on a larger time frame. I think this is going to be redistribution. Okay. Let's go with, saw something amazing. Somebody asked me to analyze it today. I think it was Jameson. It was you. I think it was you. CHF. What was it? CHF USD.
One thing to keep in mind, guys, is like, as you can see, you're breaking everything down. That's exactly how you keep all your emotions in check, because he's essentially just assessing the market in real time, asking, where we've been, where the liquidity stands, where the banks are, where the banks got in, and kind of speculating where we might be going. And so therefore, you're just analyzing if that proves to be true or false. Did we break structure or no? Did we fail? Yes or no? It's very simple. And that's kind of how you can keep, the emotions are everything in this, right? So just kind of, once you get to that point, keep practicing, you'll get it.
Why don't I remember what pair it was at all? Jameson, what pair was it? Was it CHF JPY?
USD Swiss. USD Chef.
USD Chef. God damn it. Yes. Okay. All right. I mean, like, how is it not the same freaking thing? So 1 hour, right? 1 hour. I'll go through this, guys. We're approaching some POI on a daily. And as we approach it, watch the order flow. High, mitigation, makes this a high. That slingshot candle, whatever the order block, right? That breaks this structure. So high, low, into the supply. Lower high, fail to take this out. So you got the low. And then we take out this high, technically this high as well, and this high, and make a higher high. Order flow shifted. What are we waiting for? Mitigation. What do you see? Inducement. Buy. Inducement. Buy. Take out all of this liquidity into where the bank got in to shift the order flow, right? This is how the order flow shifted. Mitigation, boom. Buy this last week on Tuesday. You're sitting hella pretty right now. I don't know what this is, but it's probably 1 to 20 already.
And USD was actually identical to that on the 3rd to the 10th, the same exact setup.
USD what?
CAD, my pair. Yeah.
So super easy. High, lower, low, lower high, and fail to take the low. Take out the high that did make the low, right? Take out this high that did make the low. Shifted the order flow. Now you got to figure out where the mitigation. Always 2 places: exchange point or extreme point. In this case, you don't have an exchange point. You just have extreme under the liquidity. That's it. If you're wrong, if I'm wrong, does this. Same thing all over again. Exchange, extreme. That's it. Simple. Gold. Ah, motherfucker. It was clean Friday once again. I mean, I don't even have to switch. You can see what happened. A bunch of liquidity here, failed to do anything, comes under all of this liquidity into this last order block, and boom. I was kind of thinking it's gonna come lower, but the fucker still is in this range, which is the original range. So staying away until it figures out what it wants to do. However, fundamentally, gold is gonna be bullish for a while. And if you look at daily, what's happening on gold, if you look on daily, so this was the target. That's why we took it. This was the target. And then we are consolidating in this last point of supply, and we broke it. So I have no doubt this shit's gonna skyrocket this week more. If you look at daily and you figure out what's been going on, this low, right, in March during pandemic, created this high, and we've been slowly doing complex pullback, mitigating every single time from extreme, until it was this, right? It came into the supply, did the distribution, shifted the order flow, bam, died, right? But it failed to take out this liquidity, this giant liquidity level. So if a lower high fails to take out liquidity, it automatically becomes what? Inducement. So everyone playing here right now is trying to sell. Why? Because that's the support resistance level for most people that learn trading. That's the support resistance level. So ask yourself a question. Where are they putting their stop losses? Here and here. Where are smart money traders? Oh, they see some imbalance and some, what's it called? Some order blocks, boom, boom, boom. They try to sell over here or try to sell over here, and they're all getting smashed until it goes into the extreme, which is here, and probably going to die from here after it took out all of this liquidity, because now it has enough juice and gas to come here, which I think will then progressively take out all of that and end up somewhere at 1500 even level, because that's an awesome level, and that is where everything has started. That is the extreme on the daily for the institutions, right? So extremely bullish on gold. Do not look for sells, at least not long term. It's possible that we shift the order flow here and take out and go into this supply and do come back down, take out this range, and then retrace. But the retracement happens, write this down guys who don't know, the retracement happens after an external major level is taken, and that external major level is here. So once this level is taken, now we have a permission to retrace. It's only when minor structure is taken out. Minor structure is taken out, it creates the external structure. Then the external structure gets taken out, then you can retrace. Right? So that's gold. So we're in this range here. I want this to establish what it's doing. If it takes structure, because this is now liquidity, this wick here. This wick is liquidity, so don't try to sell out of this wick somewhere or something, right? I think it should take this wick and then potentially sell, clean this out here, and you could try buying in this candle, right? Past the liquidity, you can go 50%, 80%, whatever. If that fails, it's going to be temporarily bearish. Don't try to buy it right here. That right there is the mother of all traps for smart money traders. So freaking obvious, right? If it comes lower, I'm not interested in buying it until right here. If it comes lower. That's a trap. All of this is liquidity, and this is where the movement started from. This right here is that slingshot that broke all the structure and created new structure. Right? This is a trap. So most likely, again, if it comes higher, awesome. Breaks makes a new high. Then I want this to take out all of this and come into here cleanly into unmitigated order flow here. Right? If it doesn't and starts coming down, wait for the retracement after the order flow shift and try to sell and buy over here already. Okay, so that should be clear. All right, we got a question here. That's a good question, brother. I don't know who this is, but I have no idea what happened to Peter. I have not seen him in the last few days. Myself, right? Usually we talk with him, but I don't know. I don't know, brother. I know what happened to him. US 100 baby. I just showed gold, right? And I told you what's gonna happen. And I told you, don't buy in here. It's gonna clean this and then go. Does that not look the same? You tell me this shit's not an algorithm. That is the fucking same thing. People are trying to buy here because look, it exploded from here and it goes right through it like through butter. It takes out all liquidity into where they got in. I actually wanted it to be lower, but I guess they stopped it here and then come back. So it didn't quite come to the supply yet, and it reacted. So I still would like to see it to come in higher, take out this wick, do an order flow shift on this is Nasdaq, so like you got to have an order flow shift on like 5 minutes, right? And if if not, then watch what it does here, because now you got I really like the top, always like the highest point, because this is liquidity, equal highs, but it could react here after taking. Just depends how many levels of liquidity. So right now, again, we have that reaction, right? We were having upward motion and all of a sudden change of character, right? So we are in this range here with the beautiful order block sitting right there. So again, if it comes here, it could be a good buy over here. If it comes higher, you want to watch for order flow shift and for it to do something like this, boom, fail, break, come back here, or come back here, and then drop. Right? That's what you want for Nasdaq. Okay. I absolutely love Nasdaq. This thing is going to be beautiful. I just don't set limits. I always do market orders because I learned my lesson very hard. If you do set limits, please use twin trading tip that I said many times. I'm going to repeat it since wait, what's going on? Since some new people here. So the twin trading is just basically any trade, split it in two, and do a 1 to 2, 1 to many. That way, if you're looking in a smart money area, if you're looking in some order block that is obvious, 90% of the time will have a reaction and you'll get your 1 to 2. So you will pocket right away your 2% or whatever you risk up, right? And then you don't do anything with the second position. So if you lose it, you're still 1 to 1 in profits. That way, even when you lose, you don't really lose because you got your 1 to 2 and you're safe, right? You don't have to worry about the second trade. But if you are correct, then you're basically making profit, big profit on half of your position. The other position is just only 1 to 2, but hey, you're in profit. So that's what I do with sell limits if I do them, or buy limits, right? But most of the time, I wake up at 6 and I just trade my New York, and see, because I can see what London did, what Asia did. So, it becomes much easier to trade that way. So I don't set the limits. I watch the price action. I watch the order flow shift. I watch the AMD development. For those who don't know, AMD stands for accumulation, manipulation, distribution. And you look for mitigation in only 2 points, either exchange or extreme. Euro USD. So that essentially had, I guess somebody bought over here on Wednesday, and it had a really good reaction before it melted. I did not do anything on Euro USD because I was thinking it's going to take out these highs into the last point of supply like it did all weeks before, or I thought it's going to go to extreme. Nothing happened. It just died, melted, right? And again, look at what it's doing. Drop, base, drop. So why is this happening? Well, this right here is mirror image of DXY, and I showed you where we're going on DXY. Right. We're going here first, and then most likely to here through this, because there's a lot more people were sitting here than here. This was a quick one. So we might expect a reaction here, but ultimately we're going to get to 100 level. So with Euro USD, the same thing. We will probably have some kind of reaction in this area here, but I'm waiting at 1.1, right, for my real buys. So I'm not looking for buys on EU. Therefore, Euro GBP, for those who trade that pair, is also going to remain bearish. So you shouldn't be looking really for buys. That's a low probability trade right now. You're much better off looking for sells. And there's definitely places to place your sells, like, not to state the obvious, but again, like, that's the obvious point of supply right there. So what I'm expecting, as always, for it to do stupid things like this, boom, take out that, come back, and do something weird like this or something. But this is the easy trade. It just depends what price action is doing. And EU is not attractive to me right now at all. It's ugly as hell. If you did get into the sell, congrats. I don't know how you would get in other than gambling, which I guess is a strategy for some. It's cool. Because it never really came back into anything and did anything. It just fell, right? It fell, consolidated, fell, consolidated, fell. It's not given any retracement. What's a legit retracement? At least 50% of the move. It did not even move 20 for the most part. It's just, I don't know what it's doing. It's just dying. So, nothing interesting for me there. And what else we got? Hey, who's excited about Angry Apes? Yay. Angry Apes to the moon.
Dude, those apes look like they're all strung out.
Well, we're in bearish market, so they're struggling right now.
A little upset. Okay.
They're a little upset, yeah. For me, USD CAD's got a little bit more retracement to go down right now. I don't. Overall, it's bullish and all, but is it? Hang on. Yeah, overall, it's bullish. It's just on the retracement, and as you see on 4 hours of where true buy for me lies is all the way over here. We had the accumulation again. We're sucking in the buyers, but where did the bank get in? Right? Where did the bank get in? Bank got in over here, and then reaccumulated, and boom, right? Explosion from there. All of this that come back, that form of structure is all retail, right? So all of that is liquidity. Now they're consolidated, reversed it into the supply. And I think all of this is going to get grabbed. I think all of this is taken out this week and come into here and then buy higher. But I don't know. That's just, I don't trade this pair that much, but I was actually looking. I don't think it did this analysis for someone. I don't think it hit perfectly. It did hit the area though, so I'm sure. 1 second. Oh yeah. Yeah, very simple. Again, very simple. So we're impulse, right? Here we start at schematic, whatever. Here's your accumulation. Here's your manipulation. Here's your distribution. Here's your mitigation, wick to wick. Or low, high, low, high, lower low, but higher high, and then bounce in the last point of demand. Reaction, failed to take and make a higher high. Take out the low that did create the higher high. 2 places that it can come back to. 1 is exchange. 2 is extreme. Comes back to exchange and melts. Easy snipe right here. I mean, how fucking simple is it, guys? It's always the same thing. It's all you gotta watch. So you come in here, clean chart, Yuri. Try to make it super simple for everyone to see. I'm gonna make an effort right now. You ready? Make an effort. Here's your accumulation. Here's the manipulation. Here's the distribution. Here's the mitigation. This low creates the highest high. Right? Low, high, lower low, lower high. Or you can say, there's the high. Okay. This leg, this low creates this high. This low creates a higher high. Then we have a complex pullback. This low fails to create a higher high. And then it leads to break of the low that did create a higher high. From that point, the order flow has shifted to bearish. And we can look for an entry in 2 points. 1, the last point of demand turn supply, which is here, which we call the exchange. 2, the extreme, which is the highest order block, if you will, which is here. It came to the exchange point, did some bullshit, and melted. Again, when did it happen? Friday. I love Fridays. All right, so that was USD CAD, and like I said, again, I think I'm going to continue lower for now. Do not try to buy it out of here, please. Please don't. Trappy traps. Where did the bank get in? The bank got in after liquidity got grabbed. Boom. Boom. Market expansion was here. So that's where you should look for a buy. If I was trading, that's where I would look for. And this is on 1 hour. You can refine it if you like and find a sniper entry. Yeah. You can just go right underneath here, maybe here, maybe do 50%, 80%, or you can do last candle got gold, which is here or here. Yeah, anywhere here, which is what, like 20 pip range. So you can either put buy limits and do what you want, or you can wait for an order flow shift, which is what I do, and go from there. So that's USD CAD. All right, so that concludes my session. Oh, actually, AJ. Let's go with AJ. I kind of confused in what AJ is doing. I have no idea what this is, how long ago that was. So we did take out the high. However, this to me, I don't like, because even from here, it is not even 50%. So it is not there for me yet. It's very bullish, obviously. Like on a weekly, we took out all of this liquidity and mitigated here. So we're on a bullish retracement to take all these highs and stuff. So we're super bullish. But like I said, on a daily and below, we're not at demand. We're not anywhere. We're in the middle of nowhere, which is most likely meaning that we're doing the complex pullback to the area here or to the extreme, right? So gotta wait. This is actually on weekly, looks kind of cool. Maybe it'll come back into here. Weekly looks kind of awesome. Maybe. It's once again right now. This is what I see. Right? I'm just talking out loud. See all this is liquidity, and I see it coming back into here. When it gets into this area, 85 even, sign me up. Or come all the way higher. But I think we're going to take out this, have a reaction, shift order flow, and go down until we retrace to like 81 area, 81-ish, 81.25, somewhere there. He loves quarter points, this one, AJ. So right now, for this week, probably we are bullish on AJ. Cool, cool. Can you show where to set limit of the Ryan? It's not you, Ryan. It's different, Ryan.
Yeah, I know. I read that. I got confused. I was like, did someone hack me?
Can you show where to set limit on for the exchange area, please? Do you have a pair for me? Or where, how do I identify if you are with an exchange? Right. So, like I said, to me, because I trade market, it's always ranges and order flow shift. So AMD and order flow shift in any point. But if you're just trying to like set limits and stuff, the exchange. All right. So like, let me find a good example. What is? Let me. What's a good one? So like, right here, this order block here was the demand, and all of this is the reaction from it, and then we came down, right? We came down. So this last mitigated area was here. Right? This whole area is now your supply, into which it comes in here. And I'm just randomly picking the area, right? So And of course, I lost my place. Oh, here. Okay. So rather than picking an area, you take the whole thing, I would say. There's different ways of doing this, of taking the whole thing. So one way is, of course, just enter at the highest point and then have a bigger stop loss in a smaller position. The other way is to do multiple orders with tiny stop losses. So, well, like most of the time it will be for the exchange point, it will be you'll see the reaction, and wherever the highest point of reaction is, that's okay. I'm mumbling now. Let me find a good example for you. Let me find a perfect example for you. Okay, so like right here, you see how this low to this high is all supply. Okay, but then where's the last wick? Right, the last wick is right here, this wick, and then it drops. Right, so typically you would be okay with just like this much, right? But then depending on the pair, you would increase it to the highest point. The safest, and this is what Peter usually says, instead of guessing or coming up with some stuff, you can make yourself a rule and always happen. It always happens differently. Nothing is picture perfect ever. If somebody tells you they're expert in Wyckoff, they better be like Mike, understanding supply and demand, understanding how it moves. Like, all right, so this is the exchange point, for instance, in gold, right? So we have this giant reaction here, and then we die to the bottom. I can say, okay, what? I am going to go like this and just use this as my last reaction. But I know that the fast reaction was all the way from here to here. So if it's too much, just make yourself a rule. So, okay, that's my last big reaction. So I'm going to go from here to here, and whatever that is, right? Or it actually is better to go multi-time frame. And on multi-time frame, if you look in at the exchange point and it still stays there, the same, order block or whatever you're looking at still remains there. That's your, the more time frames have it, the better. If they move, that's bad. But if it remains the same, that's better. Yeah. So I don't know if I answered your question very well, but it's much easier to not be greedy and just mark out the area. This is 100% what I do. I mark out the whole area and I wait for the price to get in there. Once the price gets in there, I start looking for order flow shifts, for AMDs, for what the price is doing. The first reaction, 99% of the time, the first reaction is going to get taken out. So here's your first reaction, and it creates this range. So it gets taken out, then we shift the order flow, then we fly. So this, especially if it's a wick, every wick is liquidity, always. So that's a good rule, right? But if you're one of these people that, oh shit, I'm going to work and then I'm not there all day and I'm missing out all the moves, then my biggest advice to you, honestly, for putting my hand on my heart, stop fucking being greedy. Mark out the whole area of exchange. Put your entry, let's say you go 25% or 50%. That's your stop loss at the end of it. And then whatever your profit. And if this is like 100 pips and that's too much for you, divide your order until it's only 1% risk. Even if it's a tiny 0.01 or something, because your reward will be enough. Your reward will be enough by the end of the day, right? But another thing is what I was showing, the model of this, and up a time frame, by the way. If you're one of those people that only trades like, can set it up and then can't really be there during trading, increase your time frame. Be much cleaner setups anyway. But what I was saying, this happens, so your retest from the exchange point might not hold, because of the inducement and how markets work. It's like, honestly, I think that's part of everyone's trading plan. It should be, is that you give yourself time to trade. And if you can't be there and watch during the kill zones, which there's an Asian kill zone too, not just to London and New York. And you can trade Asian pairs with huge success because those fuckers move during Asia. That's why they're Asian pairs. Yeah. So you should be able to find time in your day, 1-2 hours, where you can trade actively looking at the market. If you can't, maybe trading's not for you. I'm not the person who sugarcoat it. And if you're more of a position or swing trading, then your stop loss should, start at 20 pips anyway.
And to add to that as well, it's very important to be consistent too, because if you're, trading on a Tuesday evening and then you go to a Wednesday morning or something like that, the markets are going to move differently as well as the pairs. So focus on kind of what you're trading along. Like if you're trading like the Asian session, obviously a lot of the pairs with the quote being Japanese yen are going to move a little different. And those are the ones that are going to be affected the most, rather than looking at like Euro GBP, which is obviously not moving at that time. So that's why a lot of times for me personally, I always do the majors because I trade in the morning. And so consistency also on the day you trade, because Tuesdays are going to be different than Fridays, because position traders get in and manipulate the market differently on different days. That's a lot of times why you see the highs and lows get taken on Tuesdays and Wednesdays, or set on Thursdays and Fridays because of that. And so, just be aware of that and try to be a little more consistent.
Oh, last tool, guys. It always helps if you're confused on the pair to look at the sentiment. Now, first, it should be price action, but if you're super confused, like I get sometimes, I always look at the market sentiment on my FX book. And let's say USJPY, somebody just asked me, what do you think? I think it's super fucking bullish. Now, if you look at this UJ here, you see how many, what is this? 83% of people selling it. What do you think the UJ is going to do? It's opposite, right? Like, look at this. People on average are holding 273 pips of stop loss. Crazy. So you got this UJ. Do you have an idea why people might be selling right now? I have a fucking perfect idea why I've been selling progressively. They started because of this notion of trend line, right? They started selling here because, that fake out, it's going to come back, and then now they're selling because look, it's supply, it's resistance, not supply, resistance, right? So we got this thing taken out the break and retest that took out the high. I mean, this is the same fucking thing. Break, retest, take structure, come back, take out the retest into the demand. And then now we did this, blah, 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 created the range, took out the low. Now we're here. So taking out the high, coming back, taking out the retest and coming higher. So that's what, this is weekly. Obviously, it's going to take forever to do that. But so now you got this. We are at daily. We're at resistance. So a couple of things are going to happen is people are going to have opinions. People are selling right now. people are, putting stop losses in profit, all this stuff. So most likely what I see for this is it's coming, taking this wick out, going buy. FOMO in people are going to come in here and start going, oh shit, it's going up, buy, 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 buy. They're gonna slam the shit down. Smart money traders give you like, hey, we broke structure, let's try to buy out of here. It's gonna come fucking crashing down, taking all of this out into here or into here. So for me, it's a buy out of here with the order flow shift or an AMD, or a buy limit out of here. So that's on the daily. See what 1 hour is doing. So yeah, so right now though, I do think the target is high. So we're bullish, all you gotta say. So now you just gotta wait and figure out where to get in a buy. And this is an idea. This is an idea of where the buy might happen. So takes out this high. Again, playing the ranges. We're in this range right now. So depending what Asia does, I don't know what it's gonna do. But I would, this is my initial opinion. I don't like predicting the market. I like to reacting to what it does. And right now it's bullish as fuck. You don't want to buy because we're freaking high as hell. You don't want to sell because you're selling at liquidity. So you just got to chill on UJ. The big picture I showed you is it's much crazier than you think. I do think that we are going up now, but I do think that it does this all the time where it's going to first come up, take out the high, then shift the order flow, come back, take out this low, and then start doing something to come up higher. So just got to get in the buy right now at some point during London or whatnot after it takes out this high. Again, external structure taken out. So this looks like a range that's going to get taken out. See what Asia is doing, see what Asian range is doing to figure out what did happen today. Just this, we're still in the range. The way I play the ranges, by the way, if it comes out, right, it has a wick and then comes back and engulfs this candle, then you can always try to, enter from here, stop loss there, and try to play this. But once it takes out this range, I would take out the profits because, like I said, this could be a quick liquidity grab play into it. Also, keep in mind, UJ is a major. Dollar is super bullish. I don't know what's Ryan? What's the index for Japanese yen? Do we know?
JXY.
It is just that. Okay.
JXY.
Yeah, holy fuck. Excuse me. So again, look, JPY is bearish as all bulls. It's super bearish, right? And what is DXY? Super bullish. What's the pair gonna do? Go up. So look for only buys on UJ. Cool. Yep. Yeah, let's go Bitcoin. Bitcoin. I did say this is gonna be some stuff on cryptos.
Hey guys, just a reminder, put your questions in the Q&A because I'm trying to go from YouTube and over here back and forth.
That wasn't Q&A.
Oh, that one was, but there's a few other ones I see, but I'll get to those in a second, guys.
This baby bullish, but bearish right now. Sorry. Okay, so check this out, guys. Check this out. This high was broken from this. Why that? Because this is a 50% retracement. So that qualifies for a low after it took out all this liquidity. Right? So this low led to this high. That is not a retracement. That is bullshit. So, hey, is that a retracement or bullshit? Good question to ask yourself. So, Bitcoin's bullish. It's definitely bullish. Until we take out this low, we are bullish, right? So that right here is what maintains bullishness. This level, what is that? 40,000. Right? Until we take out, we're on daily, right? Until we take out 40,000, we're going to be bullish on Bitcoin. Okay. Now, having said that, if you want to get in on daily, long term, get in somewhere here, right? Below 50%, I should say somewhere here. So below 50%, 50% is here. So we want to be below it. And I see a very nice thing that's happening is this here is the last level of liquidity, right? And then I see where the banks got in, aka the exchange point, right there, 48,000. Okay, that's the ultimate buy because all of this liquidity, that's already liquidity provided for retail traders. Okay, this was the manipulation, and they entered over here, and the last point of reaccumulation happened there. So that's on daily your exchange point, and that on daily is your extreme point. Yeah. So that's the big picture. Now, if you're playing daily, you don't want to get in a buy right now at all. I mean, if you trade your, if they're not done pumping and sucking in the buyers and inducing the buyers, they're going to keep doing this. So now is, reaction from the trend line or whatever. If they're not done yet playing around, they're going to keep going. But as smart money traders, I highly don't recommend this. However, we're still bullish, right? Because it bounced here. Right? So this here, if it holds, if this demand level holds, then we're going to come higher. And this is quite a damn reaction. This is quite a damn reaction right now. So now, if we are in the area of the demand from which this higher high ended up, so this is the thing, right? If this holds, we're keep going bullish from here, right where we at, right? If this doesn't hold, don't try to do anything until this green area of 50,000 to 46,000, right? Because this is going to be clean, right? People try to go, oh, well, I was wrong. Let's move it here. Let's move. No, if it goes past this, we're done, right? But this is right now the demand that's holding it, the 60,000, 61,000 here. So what you want to do is switch to small time frame since it's in the demand area and analyze what's happening here. So cool. At this, and then we drop, base, drop. So it's a battle of supply and demand. The last point of supply right now is over here. That is the last point of supply. And then it fell from over here. So there's your exchange in extreme. Or in 5 minutes. Right? So you sort of had a reaction here from there. What I said, most of the time, first reaction, 99% of the time, it's going to get taken. So wait, that's your range. So it could go into here and make a new low and then shift the order flow, or it could keep coming down and then shift an order flow. You know, you need to see what happens here and now. Most likely, Asia is just going to keep doing this. London may have something to do with it. Maybe New York. We'll see. But you're close, right? So this is all it comes down to. Now, remember how the order flow shifts, right? So if we create structure by taking this out, right, and then come down and fail to take this out, and then take out that, then awesome. Then all you got to do is figure out the exchange and the extreme and get in, right? Different scenario. If we come into here or into here and come and take out this low, we're still bearish. If that gets taken out completely, goodbye Bitcoin until, you know, until 50,000 or whatever I said, right? If it holds and shifts the order flow here, we're going up for an all-time high again. I don't know how many, like if it's going to take a week or two, but we're gonna go for this. If this holds, so it's always demand versus supply. So what's going to hold? Right now we had a reaction from demand, but that's just a reaction. We can't just, you know, have a reaction. That's it. We need to see what happens then. Does that make sense? That help? Does it help? So we're in demand, so you got to watch it closely now. Figure out which way they want to go. Right now we see these yellow ones. I have the yellow ones. It just basically means they're inside this candle right now. We're inside this range of that candle. Right. So you got exchange and supply. You got to see what happens in these two areas, or if it's not even going to reach it and keep going down. So that's what you're going to do. Just watch what's going to happen. Are we going to keep breaking structure to the bottom, or are we going to shift to the upside? That's what hold the bearishness. We take this out, we're bullish. We take this out, we keep going bearish. Simple. Robert, there's several options for that. Oh, you typed in answer. There's several options for that, Rob. Number one option, the one that I don't recommend, but you're welcome to do it, is you can still purchase until New Year's. You can still purchase the recording of the bootcamp, right? Where we explain all that. It's an 8-hour bootcamp that we did a couple of months ago, where it was just 8 hours of grueling step-by-step from supply and demand structure to AMD, entry protocols, strategy, 4 rules that we ask, everything, right? That is only $200, right? But you're just gonna watch the videos. That's all you got, right? Second option, you can join Furious Snipers. Then you become part of a family, and basically myself and Ryan drill that into your head and teach you, show you everything, show you examples, and spend time with you. That 8-hour bootcamp, I have it. I have it. That's it. Right? Me and Peter, we have it. No one else has it. There's so much scam out there and so much leaked stuff that I won't be surprised that our shit is out there too. But I'm not gonna tell you where that is. Yeah, we have it until New Year's. After that, I'll shred it. Lots of stuff is happening New Year's. We're gonna launch the website on New Year's. It's gonna be insane. And then Angry Apes to the Moon by New Year's too. Okay, is this correct? Retracement happens after external major structure is taken out. Correct, Ray. That is correct. So basically, I'm trying to draw this, but I'm gonna try not to murder this. Oh, before I do this, hold on. I said Ethereum. Let's look at Ethereum is the same way. Oof. Ethereum went lower, much lower. Ethereum took this out, so Ethereum is actually bearish. It took this out. It didn't close though. It didn't close bearish, but it's lower, so it's weaker relatively on the 4 hour. So it took out into this candle. Okay. Yeah, I don't like Ethereum. I feel Ethereum shifted, so I think Ethereum is going to be. That's a ginormous reaction, though. The same thing, though. Reaction is a reaction. It's not everything. Right now looks very bullish reaction, right? But we need a smaller time frame to see what's going on. Because wicks are liquidity, and I need to see more price action in order to see if it's a buy or a sell. And all will be determined the same way. So Ethereum, same story. Okay, you got the reaction. Where is it going to turn around and stop? And then what is it going to do after that? Is it going to go for? Is it going to push up to come down, or is it going to push down to come up? That's all you got to ask yourself. So whenever you're pushing in this manner up, you're pumping up. This is what it means for the question, Ray. So when we do this, banks got in right here. That is liquidity provided for retail, creating liquidity. Then when we come here and we take out this liquidity, that is now structure, right? So we take out the minor liquidity, which is the internal structure, right? We create the major structure. We take out the high, creating a new high. After we take out this external liquidity, we retrace into exchange or extreme to come higher. Hope that makes sense. So inducement, 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 true buy in extreme where the banks got in. Mitigation for smart money patient traders. Fury trading, buy, 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 buy. Partials, 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 buy another. No, I'm just kidding. Sometimes I get crazy. All right, so okay. So we got questions, open floor. Holy crap, there's a lot of chatting going on there. Anything in the chat I should see? Yep, Brian, awesome answer there. Yeah, buy and sell stops is literally the worst thing you can do in trading. In fact, if somebody does buy stops and sell, if I ever see that, there's only one word that I am going to use for that person. Respectfully, you are a gambler. You do not buy higher and sell lower. That's not how the saying goes. This whole trend is your friend bullshit. It's all great, but at least buy the dip. At least that makes you semi-smart. Buy the dip, right? Not buy the highest high, right? When the hype sets out and everybody says buy Bitcoin, the Bitcoin is already at 60,000, right? That's too late. When people say buy my apes at 50 Ethereum, they're people that benefit are the people that bought it at 1. So yeah, same thing here. If you're doing buy stops and stuff, so this is what I wanted. I forgot about that. I wanted to talk about at the beginning. Is look at your results for those people that've been trading for a little bit. Look at your trading habits, and then ask yourself an honest question. Are you a gambler or are you a professional trader? And if the answer is you're a professional trader, understand, like ask yourself, are you behaving like one? Are you behaving like a professional trader? Do you wake up at the same time and trade at the same time? Do you analyze trades before the market opens, or you're just, flipping a coin? Like, do you just, if you trade Wyckoff, do you just label shit out, or do you actually understand what is price doing? Where is supply sitting? Where is demand sitting? Where are retail traders? Where is liquidity? All those questions you gotta ask yourself. Did you get lucky, or are you consistently executing entries? Do you have days that you don't trade? Do you have days that you work on your mindset? Like, are you growing, or you're just doing the same thing over and over, expecting different results? Fucking be honest with yourself. Like, people mostly trade. I know I trade for that, to give yourself freedom, right? To maybe to retire your parents or whatever the fuck the case may be. Right? You're like, so if some people are, oh, wait a minute, I failed another challenge. Well, shame on you, dude. You failed 20 challenges, like maybe you should start trading on demo or something, practice, figure out what's going on wrong before wasting more money and time. So that's my biggest thing, is like, I know Mike's partner, Victor, for those of you from Aporia, he trades 1 trade a month, but his average is like 1 to 300. His best trade right now is at 1 to 550. Fucking insane, right? You don't need to trade much if you know how to trade. That's why I say, pick a pair, pick a crypto, pick something that looks, use divergence, use whatever you need, whatever you know, to figure out the strength and the weakness of Forex pair, and then milk the hell out of it. If you know what I just gave you on Bitcoin or on gold or something, and you know the daily picture, and you know the target, you know where it's going, even though during the day or weeks it might do some bullshit, you know where the price is going, then have conviction, enter at the right time, and then keep fucking adding, taking partials, adding, and keep playing that pair. That's what I was trying to say. No, Rob, dude. That is not a stupid question. Direct message myself or Ryan on Instagram, on Telegram, on Zoom, anywhere, and we'll get you set up, dude.
And I put all that stuff at the beginning of the video, so if you don't have it, you run in there on when you rewatch the YouTube video. But I also have a question on YouTube. Go ahead.
Yeah.
Go ahead.
That's what I was gonna say. The recording lives on YouTube, right? Yeah. So
right, and then I put it up on the screen all the time, and if it's always on all the videos. We make sure of it.
Lord
But this
Fury
question
83.
is, yes. How do you use inside candle indicator? Do you use inside? I'm not exactly sure.
You're talking about volume profile?
I'm not exactly sure. Because we were talking about divergence, and then we were talking about
inside candle indicator. So I think he's talking about volume profiler.
Volume profiler. Okay.
Well, because inside the candle, right? So there you go. The bootcamp was lead, and there's a lot of time that I was sitting quiet, and Peter was breaking the shit out of everything. So inside bar indicator.
Yeah.
Inside bar indicator. I don't know what you're talking about.
Right. And then the other question
you're
was,
talking about like a pattern of inside inside like the bullish harami and bearish harami candle patterns. I mean, that shit can be found on Google. It's very easy. You have a tiny candle within the big candle, it's going to be bullish, and another way for bearish. I'm not sure what the question is. If a volume profiler, is it on YouTube? You said?
Yeah. I'm assuming.
Oh, never mind. Inside bars on my. I got you. What I was talking about. Don't worry about it, brother. This is an indicator I'm working on. I'm a software developer, so don't worry about that. That's not available to public yet. And it has to do with ranges and playing the ranges, but it's not working fully yet. So yeah.
And then the second question was about divergence and correlated pairs.
Thank you, Gani, by the way. That was helpful. I was lost. I was like,
yeah, I was confused too. I was trying to figure it out. But the other one was talking about uncorrelated pairs when it breaks structure twice. And I was trying to do it, answer him in chat or text, but
correlated. Okay,
the simplest way to do it is what the rules are. You must have two correlated pairs where the base or the quote is constant. And the second thing is one must be taking liquidity and one must be mitigating.
But he's talking about breaking structure twice.
Right. So basically what's going on is he's probably finding an area that there's liquidity sitting on, and it's not actually taking liquidity, it's actually making.
No. So there's three patterns, man. There's three patterns that in the first bootcamp we talked about. Maybe that person been on the first bootcamp. So when you have two correlated pairs and regular divergence, the best one, right? The best one is when you got this one breaking structure, coming back, and then breaking structure again. Okay. So it's like this. While the other one, instead of, hang on, I'm trying to, instead of breaking structure to the bottom, it actually comes up, right? So then that's the normal, that's the best divergence, because when this one's going up, this one's going down, but before it's going down, it already broke structure to the downside, shifted the order flow. So that means that it's showing you a weakness and you have a confirmation of a broken structure. That's the best divergence. Sometimes, however, it breaks the structure twice, but it doesn't break the main structure. So what that means is you're like this.
Basically just complex pullback.
Right. You're like that. So you broke your own structure once and structure twice. Now that's still a divergence with this pair. However, it's not going to be as probable at all because you're still bullish on the major trend. And that complex pullback is dangerous, right? Because like, let's say this one was doing this. Right? And it's doing the same thing, but it keeps diverging, right? Which if you got in here, you're at least got a little bit of profit. If you got in here, you're just getting this. And my biggest advice, avoid this and only take divergence trades that are doing that, because now you got structure and divergence showing you the same thing, that it's bearish. Yep. Hope that answers your question.
And on the higher time frame too, stay with the same order flow and then find your divergence on the lower time frame, go in the other direction. So you're always going with the flow rather than against it.
So let's say your pair is going like this, and then for a minute they're going like this. They're correlated, and then all of a sudden one of the pairs does this, the other pair does that. So your major structure is bullish, and you got a bullish divergence after bearish retracement, and that's what you mean, Brian.
Yep.
Boom. Right? Because the expansion is always going to be bigger than the retracement.
Yep.
All right. That's it for questions?
Yeah, I think so.
Who's got questions about NFTs? Let's talk about NFTs. No, no one wants to talk about NFTs. Con Lee wants to talk about NFTs. Con Lee's been talking nonstop about NFTs.
NFT from the US Jamaican game. He has little cards.
Lost in the rabbit hole now.
Okay, so NFT, that's a, all right, first of all, do you trade Solana NFT? I'm about to, and so will Con Lee, maybe Jameson, we're about to buy on Solana. It is 10 times better than Ethereum, on my opinion, because there's no gas fees and because there's way less competition. So it's like trying to make a coffee business in New York versus trying to make a coffee business in, yeah, I agree with that, Conley, versus trying to make a coffee business in Texas. You know, $60 a square foot versus $6 a square foot, and 1 million people per square foot, whatever, like opening coffee shops versus like 10,000. It's much easier to succeed in the space that it's not as crowded. Plus, there's no gas fees. The fucking gas fees for Ethereum Angry Apes cost me almost as much as Angry Apes themselves. That's not cool. And during the public sales, the gas fee was 3 times what the actual NFT was. So it, like, fuck that. Solana is where it's at. So if you're about to get into, definitely recommend that. Second one, where do NFTs get their value? Now the thing is, I'm learning about NFTs more and more every day, and I only know like this much compared to, let's say, Mark Zuckerberg, who's developing the metaverse. But like 10 years from now, everything will be an NFT. Yeah, exactly, Conley, dude. So who was asking this? Donnie, bro. So I've been saying this example before, but for those who haven't heard it, let's say you are a recording artist, right? And typically you're going to, if you want to be famous, you have to be signed by a record label, unless you're Tom McDonald, who does everything himself, but there's only one Tom McDonald. The record label will give you an upfront cash, let's say 100 grand, to promote yourself, whatever. They'll promote you globally at the expense of you giving them 80% of all the sales of your records. So when you sell a CD, you'll get 20%, they'll get 80%. Now with NFTs, it eliminates really the need for record label, because let's say you have a small fan base of, I don't know, 100 people. You create an art, for instance, or a sample of music, whatever, which at first is just a JPEG, right? But you hire an artist, you know, that professional, whatever. Then you sign it on the blockchain, which what makes it yours, right? So when somebody buys an artwork from you on blockchain, you pay money for it, and you pay gas fees for transaction, whatever. It generates some Ethereum, whatever, for, you know, by working and solving that problem, but it authenticates that transaction as yours. So now everybody knows that that piece of artwork is your property, right? If I take a picture of that artwork, it would be like taking a picture of Mona Lisa and saying, hey, I drew Mona Lisa. Nobody's going to believe you, right? On blockchain, it will say, well, that's not the same. Leonardo da Vinci was like, no, it is the same, because if I take a picture of your artwork and then someone smart goes, okay, well, let me see the blockchain, and the blockchain says, okay, it originated in wallet of Gunny, then I know that that work that this asshole is trying to sell me is not his original, because it's your wallet that it's tied to originally. So I know who's the owner is all the time, because it's traceable. We can trace it to that wallet. Now, how is it actually gaining value? So now, as an artist, I created this artwork and I sold to 100 of my fans. Now they hold that artwork. So then I say, for instance, every time I release an album, anyone who holds my artwork will now get 20% of my sales, right? So all these 100 holders, 20% divided by 100, they will get the money from every sale I make, and I will make 80%. You go even further. You say, okay, guys who own my NFT, you're my fans, right? Help the brother out and share it to 20 people minimum. If you share it with 20 people minimum, or like my concert, you talk about my concert and you send me the proof, I will enter each one of you who shares it to 20 people. I'll enter you in a contest and I'll give you $2,000 for it. So everyone starts sharing, promoting for me, and only people that know are who hold my artwork, but I will give them a reward by doing this raffle. And this is just ideas in my in my head. So that's that, right? With the gaming industry, it's even crazier. Like what we're trying to get is the poker NFT, and it's gonna be even sicker, dude. Like with the poker NFT, because they got, number one, they every time you hold the NFT, it actually has a utility tied to it, which means it's for just holding these NFTs, you generate a token, which is just like any other cryptocurrency, like Bitcoin. They're starting the token in December or in January, and the token will be valued at 1 cent. For holding this NFT, they told us you're gonna get at 5,000 at purchase plus 1,000 a day. So 1,000 tokens at 1 cent, it's $50 a day just for holding it. I'm gonna make $50 a day just for holding that NFT, right? Well, how they benefit? Well, fuck, they sold 8,000 of them in 13 minutes. That makes 3.5 million for selling them to us, right? But we're gonna make residual income, passive income, just for holding these things. And then on top of that, they're because you're holding this, they give you a 3D character with the VR glasses. So now they're gonna create the poker games, and they're going to partner up with people like Daniel Negreanu. I don't know if you know poker, like Daniel Negreanu and Phil Ivey and all this stuff, and they're gonna get some ideas with them, maybe get their sponsorship or their partnership, whatever. And now you maybe their advice, so you'll be able to participate games even with these stars on the blockchain or outside events, and only people eligible to come to these games are people that hold these NFTs. Plus, if you hold it, let's say, they'll give you 25% discount on a buy-in to a poker game. Like it, everything can be digitized. I actually had a really interesting conversation with a friend of mine on the bet side of that. And that is kind of with the movie Ready Player One, where people that are loners or people that are depressed or affected by politics, and go Brandon guy. Let's go Brandon guy. Vaccines or whatever. I'm not going to get political here because we'll be here forever. But they're so depressed or have anxiety in real life that metaverse, where you can look at a Nike shoe who have now a stake in metaverse, and it will transform to Air Jordan, but you can't afford Air Jordan. But in the metaverse, you can, just by wearing the VR. You look at yourself and holy shit, there's Nikes. You look at whatever outside the window, and here's the golf course that you always wanted, right? They're going to so get immersed into this alternate ultimate universe that they're going to take that as the real reality, and that's when you lose humanity and stop hanging out outside and just fucking always in that bubble of metaverse. And that's a sad thing, because on the other hand, it probably prevents suicide, but you basically turn into goddamn robots. So there's that part to it, I think. I don't know. You guys can voice your opinions. Feel free to unmute yourself if you want.
Yeah, there's a lot of movies that have actually played with that idea. Like Judge Dredd. I think it was Judge Dredd where they.
Oh, that was a long time.
Yeah.
VR in real life will coach. I mean, yeah, I'm sure they will. I mean, it's just, what's the difference between wearing glasses or wearing a goddamn mask? People do that. It's the same thing, but they'll look at you, and all of a sudden, not you, but let's say there's an ugly girl, but he loves her personality. All of a sudden, he puts on VR, and it's a freaking supermodel.
It's shallow how.
It's just, you see what I'm saying? Like, you can make perfection, which it doesn't exist. So I don't see why not. Yeah.
I mean, it already does it, with the apps. Like, what is those filters for pictures and stuff like that?
Ray finally asked the stupid questions.
Oh, good.
I thought they're never going to come. Where do you research for NFTs? It's called Google. Spell it Google. Sorry, I'm trying to not be an asshole. But just go to Google, and there's a shit ton on YouTube. YouTube is Google anyway. But on YouTube, if you type in NFTs, there's like guides, 101s, everything. Or you can just ask me. I'm like the best person. No, I'm kidding. I'm not. But you could ask me. Where do you buy NFTs? So you buy NFTs on marketplaces. For Ethereum, the biggest one is OpenSea. There's Rarity, the Atomic NFT. But OpenSea is where I get them. You can research of how rare there is on rarity.tools and raritysniffer.com. For Solana, this website that I know is called solanaart.io. For Ethereum, OpenSea.io. That's where you buy them. Or if you get into the project, you buy them from the website of the project on a pre-sale or a public sale, which before they hit the public marketplace, those will be way cheaper than when they make it to the marketplace. Because let's say I own a project or whatever, or I'm into Ryan's music that he sings in the shower, and I buy his
Works
NFT,
with Angel.
and I buy it for 0.00001 Ethereum, and then sell it for 1 Ethereum.
There you go.
So that, so it's but so it's either on the websites or on the websites that I just said.
Yeah, and this bald and beard thing, this is nothing but a filter that your AI use.
What?
I said this bald and beard thing is nothing more than a filter that you and I use.
Okay. Yeah, that's an NFT too.
Virtual reality.
No, it's actually not true because what is that? Halloween, I shaved my beard, and that
That's
was
true.
the first time in
It's
6
going
years.
in pretty quickly.
I know. This is what, 2 weeks?
Yeah,
2 weeks. It's back.
I know.
I was clean
Good
shaven.
way.
Nobody shall ever see that stuff again.
His daughter was so funny. She just kept looking at him, laughing.
Yeah. She's like, it's the dad, just different dad. It's my other papa.
That's right.
All right. Well, I think it's good time to wrap over. We've been going at it for about 2 hours now. And wish you all successful trading. And hit us up. Don't be shy. You're welcome, Shakira.
Thanks
if
to
you're
everybody.
if you're not winning and you're not part of Furious Snipers, what the fuck are you doing? That's all I'm gonna say. All right. Love you all. I'll see you next Monday. And so we'll run.
Thank you, YouTube. And all those people want to get a hold of us, also get it on Instagram.